Good afternoon and welcome to our first edition of our Inside ProCents educational webinar series. You have most likely seen some of our Inside ProCents videos on LinkedIn or even in your email box. Each one designed to focus on our individual members while also providing context for the value provided by ProCents directly from our members' lips. These will continue, so keep your eyes peeled. This new educational webinar series, however, has a very special focus. These webinars are designed to help our members understand the unique aspects of the support services and products that our ProCents sellers are providing. Each selected presentation is designed to shine a light on the tools and/or solutions that are unique to each seller and that can be leveraged for greater growth-related opportunities by both buyers and sellers within our ProCents environment. As always, our focus is on our members' ultimate ability to succeed. My name is Devin Anderson, and I am the president here at ProCents, and I am joined by the rest of our leadership team. I think JR is out on an emergency, but Mr. Matt Russell, our CEO, is present and in the building here. Matt, would you like to say a few words before we begin?
Absolutely. Well, I appreciate everyone jumping on and that will be watching this in the future. So as Devin said, ProCents is about bringing the people together and allowing our environment to really be the highlight of everything. And we're happy and excited to have LED.Finance kick us off with our first education piece. So Ross, I'll turn it over to you and looking forward to learning more about financing and getting these jobs closed.
Right on. All right, so now on to today's event. Today we are featuring one of our ProCents sellers within the ProCents environment and a longtime industry friend of mine, Mr. Ross Reida of LED.Finance. Good morning, Ross, or good afternoon, I guess, and welcome to the Inside ProCents educational webinar series.
Thanks, Devin, and thanks, Matt. Really appreciate the invitation to lead the series off. And when Devin first approached me about becoming a member of the ProCents community, we really had some deep conversations about how to add value to the members. And I can tell you from my perspective, Devin and Matt have done a great job of building a platform that is truly focused on adding value for everybody that participates on the platform. So I appreciate the time. I know many of you, some I don't know. I look forward to getting to know you and those who become members in the future. Don't hesitate to schedule a one-on-one at any time to answer any questions that you have about financing in general. So thanks again. And Devin, if you want to go ahead and get started with the slide deck, that'd be great.
Right on. All right, one final reminder for everyone before we begin. Please hold your questions until the end and remember to mute your phones and computers to eliminate background noise. If you do have a question, feel free to post it into the text box and I will call on you individually when the Q&A begins. That way we do not have everyone unmuting at the same time. So with that, Mr. Ross Reida, the floor is yours.
Nice bike. Thanks, Devin. I appreciate it. Just a little background on myself and the company. We really got started in the energy space in late 2011. We were rebranding an equipment leasing company that I had at the time in Portland, and we were very active in the Portland market, but we kind of got burned on, general equipment leasing in 2008, 9, and 10. If you remember those days. So one of our owners and board members suggested that we rebrand ourselves as the Green Leasing Company of Portland, Oregon. And I really liked that idea. We started looking at commercial solar deals back when solar was $6.50 a watt. And we were scratching our heads saying, why the hell would anybody want to do that? So we got introduced to the Energy Trust of Oregon, right at the time where LEDs were becoming commercialized and they were trying to figure out how to create some incentive and rebate programs around LED. And I think the first tube project that we quoted was for Frito-Lay in Vancouver, and it was $60 a tube. So think about that in today's terms. I know many of you have been in this industry a lot longer than I have, but we've certainly seen the industry become more affordable. But financing has actually become a bigger piece of, I think there's more financing today than there was back at the beginning of the commercialization of LED. We also branched into HVAC finance, controls, renewable energy, CHP. So today we're looking at projects that still LED is the majority of what we look at, retrofit projects, but we do virtually everything that's related to electricity, natural gas, and water conservation. So as long as it touches on those three, that's really what we're focused on. So Devin, go ahead and advance the slides, if you will. So what our goal is to bring the finance capabilities that we have built over the last 10 plus years to the platform, to the members, so that you can get more projects qualified and accomplished more quickly. I've always been an advocate of offering a monthly payment to a customer with anything that you're selling. I mean, lighting is no exception. We've financed everything from software to flight simulators to virtually any type of business equipment you can think of. And in almost all cases, those are presented with some form of financing. And one of the biggest benefits to you in offering financing is it helps you qualify and control the sales process. I mean, the earlier that you offer the customer a no down payment, monthly payment model that compares favorably to the energy and maintenance savings, you can create an environment where the customer knows early in the process that they don't need to necessarily have CapEx for the project. Our role in this is as an intermediary. We don't lend directly to the end user customers. We did at one time back when we first started. And for the first four and a half years that I did this, I was a direct lender. Because I was a direct lender and we were owned by a bank, we had a pretty small credit box. And the more that time went on and the more that we accumulated partners and deal flow, it became very frustrating that, deals didn't fit within our box. And at that time, we didn't have syndication capacity where we could lay those deals off to other lenders. So I said, I really believe that syndications is the way to go, or becoming a broker in this particular industry, because we add value when it comes to managing the relationships with lighting companies and ESCOs and other industry stakeholders who are trying to sell a project to an end user customer, in helping you present that deal to the customer in the most positive light. So what we've done is we've amassed, and believe it or not, we have over 200 lender partners. Those are lenders, investors, I mean, the whole gamut. We've just accumulated a ton of funding sources over the last 10 years. So that's what we bring to the platform, is we're genuinely interested in helping you close a deal with what I call the best fit financing. Again, the key is no upfront cost to the customer. Try to make the deal cash flow positive. Present a 10-year cash flow spread. Turnkey. Eliminate headaches for the customer, but keep it simple. And if you've worked with me in the past, and I know there's a few of you in the presentation that have, we really try to get these deals done with the least amount of brain damage for the customer. We try to move these deals very quickly. The faster we move and get the doc signed and get that first 50% out the door, the better off everybody is. Go ahead and advance the slide. So I'm preaching to the choir here because you guys are all experienced in the sales process of this, and we all hear the same objections. And The reason that I advocate talking about financing early on is we have a very high credit approval rate. I would say we're somewhere between 85 and 90% of the deals that we see, we actually get credit approval on. The reason for that is most of the companies that look at energy efficiency projects are usually very well-established companies. Now, occasionally we do get young, I have one right now that's a 1.5 old company where I just told them straight up, I said, look, your parent company is going to have to provide a cross-court guarantee to get this deal done. Otherwise, you're going to pay horrendous rates that we don't want to charge. You know, we're not in the startup finance business here. So financing helps you be very proactive in overcoming the common objections in selling energy efficiency projects. Go ahead, Devin. Again, same thing, be proactive, you know, position the financing and instead of an ROI model where you write me a check, you know, in 3 years, you're going to get your money back and then start saving. You stand that on its head and say, with no cost to you, you're going to have immediate savings, and look at what that adds up to over the next 10 years. So it kind of refocuses, instead of writing me a check for $50,000, how about a $950 a month payment where your savings is, you know, $1,500 a month, so you're $600 a month cash flow positive. And then let the customer say, hey, Jim, we have a big fat checkbook. We're going to write you a check for this. And that's a good thing, right? If the customer says that, that's not a bad thing. It helps the customer make a decision. Okay, Devin. So again, the goals are, we want to keep it very simple for the customer. And that's because most of our deals are in the, what I call lower middle market C&I space. It's very rare for us to see a Fortune 1000 or Fortune 500 customer. We have one deal working right now with a Fortune 500 customer that's pretty rare. Maybe we see 4 of those a year. But the majority of our deals are probably $50,000 to $250,000. The scope of what we do, I've done smaller deals. I think Jim and I have done deals as small as maybe $9,000, right? The largest deal we're currently working on is not a lighting deal. It's a CHP deal for $70 million. And that's rare as well. You know, most of our deals are right in that, maybe call it $25,000 to $250,000 range. So we really try to simplify and expedite the credit underwriting process. The value that we add in the middle is we perform all of the back end work. You don't have to do that. We help all of our lenders underwrite the projects from a quality standpoint, making sure that we have qualified installation folks, making sure that the products have the proper warranties, making sure that they're DLC listed, you know, doing all the light project due diligence to make sure we have a good project and that it's presented to the lender in the best light. So we'll consider just about anything, but 80% of what we do is solidly in that lighting, controls, and HVAC space. The rest of it is kind of fringe to that. So go ahead, Devin. And I'm trying to move quickly to keep this at a time frame that works for everybody, and we also will have some time for question and answers at the end. I think Buck helped me design this slide because he said he agreed, right? He wanted to keep it even more simple than what the original presentation. So thanks for helping us on this, Buck, where it's all in one place. It's very easy. It flows. What are we offering the customer? What are the average terms? You know, can we do deferred payments? We have 2 programs along those lines with various lenders. One is a no down payment, first 3 months at $29 a month. So their first full month payment wouldn't be until the first of the 4th month. So if we did a deal today April, May, and June would be 29. July would be their first full payment. We have another program that's no payments for the first 90 days. And that's their first payment would be the beginning of the next month. Again, we can do, we've done some pretty creative stuff, but to be honest, most of it's just cookie cutter level payment. You know, like most of the deals are a 60-month term because it gives the customer the best cash flow during the finance period. And it, frankly, I think those 10-year cash flow spreads look best when it's positioned on. Now I've done deals as short as 12 months and as long as, well, we have an HVAC deal in New York right now that's a 15-year term, and it's actually for a nonprofit. So, but typical is 2 to 5 years. That's what you're typically going to see on most of your deals. Next slide, Devin. So this is that 10-year cash flow, keep it simple presentation that shows project costs, rebates, amount financed, energy savings, maintenance savings, shows the customer that they're cash flow positive during the first 5 years of the finance period, and then look at the savings that they accrue the last 5 years. So with no cost out of pocket, their total estimated savings, $281,727. And again, if they want to write you a check, this is just information that helps them make the decision. Okay, Devin. So again, you know, what we're bringing to the party for the members is our entire portfolio of funding sources, helping match the project to the right funding source, the best fit financing for the customer, help with the project underwriting, do all the backroom stuff. And, you know, as I mentioned, it's really trying to take load off of your plate and act as that finance department for you guys. So there's no recourse. In other words, if we do a deal, the funding source buys that deal without recourse to you. So you get paid for your project. If that customer doesn't pay, then that's the credit loss to the lender. There's no clawback to you guys. Happy to collaborate and strategize on sales strategy, and you want to talk about a project, how are we going to get this done? Here's what they need. Really happy to do. That's what I do all day long, really, is just talk about deals, how are we going to get this done, you know, and then move forward. So I think that's it, Devin. I think we want to ask, you want to do Q&A here, or do you want to move on to the next? Oh, okay, we want to talk about that.
Yeah, we'll go through all of it and do Q&A at the end.
Okay, great. Now switching gears, let's be clear. We're switching gears from project financing, where the end user customer is on the hook, to material financing for, now this would be both for lighting manufacturers and distributors who want to sell more to new and existing lighting contractors, as well as lighting contractors who land a big project and they need anywhere from 30 to 120-day financing, get the materials paid for, and be able to float that with a fixed cost over a period of time to get the project installed and get paid from the customer. So this is just boilerplate here. You know, you guys know it's hard to go to the bank to get money for, you know, you need $100,000. Hey, I need $100,000 to buy lights for this project. Well, not many banks are really interested in doing that, right? So this provides a, we just had this, or actually last month we had a contractor do this for $215,000 worth of materials down in Texas for a specific project. So it is very useful when you need it. Go ahead, Devin. So it's very simple to enroll. And Jim, I believe that, you know, when we unmute and ask questions, I'll ask you about this. I believe you've used this on projects before, and many of our other partners have. But bottom line is, it just gives you, it pays the manufacturer or distributor upfront for the lighting. So that's a great deal for, you know, Buck and the other guys that are manufacturers and distributors of lights. It's great for the lighting contractors, because a lot of those bigger deals, those customers will tell you straight up, hey, you're not going to get paid for, you know, 45 or 60 days. So yeah, it's going to have a cost associated with it. Devin, if you want to flip the slide. Well, those are the qualifications, and I'm sure, Devin, you're going to distribute the slides, but it's pretty easy to qualify, I would say. 1 year time in business with 500,000 in annual sales. So that's not a hurdle. We have had some contractors declined. But I don't get involved in the underwriting. Once you go into that portal and you sign up, it's strictly between you and the lender. I don't want to get involved in being in between on that. Go ahead, Devin. So commercial projects only. And matter of fact, we don't work on any residential stuff, so it really doesn't matter. US projects only. And that's pretty straightforward there. Next slide, Devin. So like I said, it can be up to 120 days, 4 months, $50 per 10,000 with a 2% purchase fee. A lot of time, that 2% gets kicked in by the distributor or the manufacturer as a cash discount, because they get paid up front. And so many of the distributor manufacturer folks that use the platform, they just give that 2% as a cash discount. Again, it's an auto debit kind of situation. There's no cost to get set up. Go ahead, Devin. There's no cost or commitment when you enroll. We just ask that you use that link so we can track and maintain the partners on the platform who are actually utilizing this program. And again, it's a project by project basis. So it basically gives you a kind of a materials line of credit on a project by project basis. And you know, we just add these. There's another lender that we use for larger projects. I've actually done $1 million solar deal with another lender where we financed $1 million worth of solar panels, racking, and inverters on a solar project. So it is handy when you need it. And Devin, if you throw up that final slide, I'd like to talk about rates and terms and that kind of stuff. So when I say we have a couple hundred lenders and investors in our portfolio, I'm not kidding you. Just in the lease and loan, you know, everybody knows there's so many people out there offering financing for lighting retrofits. It's not hard, you know, finding people. What's hard is fitting the right project. Well, what can be challenging is fitting the right project to the right funding source that's the best fit for the customer. So in the lease and loan, that finance agreement, capital lease, you know, fixed payment, fixed term, you know, rates right now, and we'll probably need to amend this. Just call it, you know, rates are in the 5 to 10% range for most commercial and industrial credits. Obviously, municipal, that last category, obviously we see cheaper rates in the tax-exempt municipal lease. But I'd say in the last 6 months, our average cost of funds to the customer on a muni deal has been 3.2, maybe 3.1, 3.2% fully amortized. But in their typical daily blocking and tackling on leases and loans, we do far more finance agreements than we do leases. I'd say our average rate is in the 7% range, because we do deals that there are larger deals that we do down in the 4.5%, 5.5% range. And then there's some really small ones that for really small companies, they get up into the nines. We're very, very seldom into double digits, but that's really driven by credit quality. The other comment I'll make about this is if you prefer to show the customer a bargain interest rate, you can do that with most of our lenders through buying the interest rate down. We have several partners who use a 2.9 or 3.9% financing program for all of their customers. They just build in the discount into the overall project cost and then back it out to the lender. I'm happy to talk to you about that if you'd like to do that. I don't think solar is probably appropriate for this conversation. I don't think there's many here that are heavily involved in solar. Happy to talk about that offline. But one of the things that we do want to mention and talk about is that lighting as a service, which you hear that a lot, right? I don't know how many of you folks actually do lighting as a service. We've done some. We had a huge initiative for it in 2017 and 18. We had quite a huge volume of lighting as a service. That program basically fell apart. We can still offer it. We still have lighting as a service. We still have a shared savings program. We still have a true off-balance sheet ESA for qualified projects. That's the one we're doing in New York right now is a geothermal HVAC project that's a 15-year term. That's a true pay-per-use off-balance sheet ESA. Happy to talk about more details on this, but I wanted to leave enough time where Devin can pop into the question and answer session.
Right on. Ross, thank you so much for that. Very informative and extremely powerful. This tool, if you guys haven't used finance before, you really need to start thinking about it. I'm going to ask the first question. There's nothing in the box at this point. But please, if you have a question, make sure you just type in question into the chat box, and then I will get to you. So one of the things that has always, I guess, struck me about innovative, creative tools like finance or tax strategies, or even controls for that matter, how to sell controls, is that you've always got people that get it. You've got people that think they get it and they would like to try to use it, but they're a little bit out of their depth. And then there's others who just are scared to death of these new things, because it just, whenever you do a project, you're going to have challenges. It's just, that's the old rule, no problem, no job. They don't want to add more problems. So my question to you is this. How you mentioned easy, that is an easy process. I'd like you to expand a little bit on how easy something like this. What do you give us an example of how you would take somebody through this process, and secondarily, or actually maybe before you even say that, describe to those that are here how to identify where finance would be something that you could actually use. Like, in other words, how to identify where this would work, and then what that process looks like.
Yeah, that's a great question. And I would challenge everyone with this. Would you rather assume that the customer has the money and go through all the work and the time and the effort saying, they got tons of money, this is a big company, and you invest all that time? I see this on a daily basis. Hey, Ross, these guys don't need financing. They're a big company. They got lots of money. They may have lots of money, but they may or may not have a budgeted for an energy efficiency project. Its capital budgets are directed toward capital projects, which are core business related. I would rather see everyone assume that the customer doesn't have the budget that is readily available. And I'm gonna put, if Jim's still on, I can't see the attendees, I'll put Jim Oxley on the spot. I think Jim is a great example of presenting the finance option to the customer as a courtesy early in the sales presentation to say, hey, the best thing about this is you don't have to come out of pocket with anything. Jim, would you like to comment on that and kind of how that flows from there?
Sure, I'd be glad to, Ross. I mean, I had a financial services first career for 35 years. So numbers have always been something that I've liked, and I always go into every project outlining the lease option, because just like Ross said, it automatically, you can see the customer just kind of let out, exhale, and relax, knowing they didn't have to try to find X dollars. I also, I'm a big fan of Mark Jewell in Selling Energy, and use his widgets to digits presentation, where, you know, you go in and find out approximate profit margin for the customer and show them what that saving is going to mean actually to their top line. Because a lot of times the bottom line is harder, because not very many companies really identify maintenance costs for lighting. I mean, it's all thrown together. If a bulb goes out, the maintenance guy goes change it. They don't know how much they actually spent. So what I've done successfully is I'll show them that if the average profit margin in your industry is 9%, and we're going to generate, you know, $30,000 a year savings, that's going to mean, you know, $300,000 or $400,000 of increased top revenue that you can show with no cost. And those two methods seem to really get their attention. Also, I recently had a presentation that I had 11 people bidding against me. Not one of them showed financing except me. Big company, like Ross said, and I got the project based off of that. So I think what Ross said, lead with finance, because it gives the client the opportunity to take a deep breath, relax. It shows that their project's going to make sense, because it's going to be profitable from day one, and then let them make the decision how they want to proceed from there. But to give Ross an accolade, he's not simplifying enough. He makes it so easy for you to work with. Basically, you know, you send him your proposal, he'll send out documents, and, you know, 2 days later, he'll tell you the money will be in your account, and the project's approved, and go on. He's wonderful to work with. I've never had any complaints, and it's a great, I think everybody should lead 100% of their projects with this.
Well, thanks, Jim. I appreciate that. And I know you and I have done quite a few deals together. And, you know, again, for me, I've never sold a lighting project, but I have financed a ton of them. And I just recently had one. It was weird. It was not a lighting deal, but it was a big portfolio company of commercial real estate buildings, multi-billion-dollar company. And the CEO that I was working with, who was selling the customer, said, yeah, we're not going to present financing on this one, because they're a multi-billion-dollar company. And after the presentation, he came back and said, you know, they don't have a budget. We need to put together some finance stuff on this. So rather see you assume that you're doing the customer a favor by offering, you know, no cost up front and a monthly payment that's covered by the savings, rather than assuming they have the money and they're willing to give it to you. Go ahead, Devin. Was there any other questions?
No, I love what you said, that it basically, I'm going to cross-pollinate a little bit here, because basically what you said applies to, you know, pretty much every project whenever you're looking at trying to either open or close that deal, as well as controls. And we obviously have Randy Lucas is here, and John Cambus of IoT Deployment, and they'd tell you, and they will be telling you in their upcoming webinars, that, you know, you're starting out on the front end with finance, with tax strategies, with depreciation strategies, or with the design phase, which is really, it's not selling, it's creating, you know, what the customer needs based on the application. Spending more time in those areas on the front end will increase your sales ability, as well as open up doors that maybe you wouldn't have thought of, you know, if you just went in talking lights. So that's kind of my summary and cross-pollination side of it. But I think that what you said is absolutely brilliant. And thank you, Jim, for chiming in. Matt, you have a question?
Yeah. So Ross, man, I thoroughly enjoyed everything that you had to present to us. One of the things that I'd like to ask, and this might be more forecasting than anything, but when doing deals, obviously you're doing lighting, HVAC and water and other types of projects. Where do you see a majority of your projects leaning towards on the project side? And the reason for the question is obviously lighting as a service or lighting industry as a whole, some people may say have come stagnant and now are looking for new opportunities. But for me, I always look at, the people that are here on this call or this Zoom today, they have a book of business they've earned the trust of that book of business, and they can bring back new services. And, where might these people look? I know you referenced solar, but, obviously with controls, which was brought up by Devin just a moment ago, or even VFDs in the HVAC space, what are some of the things that you are seeing as a trend to, really facilitating, more financing on your end?
Well, I think, thanks for that, Matt. I think I look at my strategy, because I'm one guy, is one to many. So, I've just recently become engaged with a company who has in the mechanical contractor space. They have a project auditing tool that helps mechanical contractors audit RTUs much more quickly, much more accurately. And it's interesting that you bring this up, because I am starting to see more of a collaboration between multiple technology vendors on platforms like that, platforms like ProCents. And I'm excited about you guys growing and adding some of these other technologies, whether it's, site survey type tools, whether it's technologies that we have. A couple of, just had a call this morning with a group who has the kind of a cooling tower product program that eliminates, I wasn't aware of this, but until, you don't know what you don't know, but it eliminates a ton of annual spend on chemicals and energy savings. So very, very short paybacks, in some cases 1 year simple payback, just because of the cost of those chemicals. So I can't give you one specific vertical, but I will tell you that anything that is, I think customers in general, commercial customers, are looking for some other creative technologies. And if you have a book of business, say you've been in the lighting space for a long time, you have a lot of customers that you've done their lights, and you'd like to go back to them with, another efficiency measure that might make sense for them. It could be as simple as, some type of HVAC controls, or it could be renewable energy. You never know. As a matter of fact, Ozark, one of the recent guys that I referred to Devin, Ozark is getting into offering solar to their lighting customers that they've done in the past. And so I'm happy to have that conversation with anybody that would like to explore that. But, you don't have to become the expert on a particular technology that you'd like to add to your portfolio, as long as you have the right expert partner to partner with. So that's kind of how I would answer that question, Matt.
That's great. All right. So, I might put you on the spot here, you and Randy together. My final question, and this is kind of a prelude to Randy's presentation that comes up next month. I know you guys have talked about, how the tax strategies and finance and all of that can work together. Can you give us a little taste of kind of maybe what that might look like, or how how you might, one area might lead in or feed into another?
Sure, I'll go first. I mean, I've put Randy's company in front of several of our partners that have any questions on Section 179D, ITC, investment tax credit. I am not an expert at that. Neither am I an expert at tax equity or any of those others. I tip my hat to Randy to take it from here, but I think everyone would benefit from having a deeper knowledge and more of at least a conversational familiarity with what Randy does.
You want to speak a little bit to that, Randy?
Yeah, thanks, Devin, and thanks, Ross. Good afternoon, everybody. I'm sorry I'm outside. The noise might be a little loud in the background, but yeah, I absolutely concur, and I like the discussion and just that idea of yeah, turn to your experts and let us help make the process go smoother, less headaches, and we find more opportunities. And we're just asking the right questions regarding, how do you want to approach this? And yes, there's definitely a direct line. I'm going to highlight that in a case study next month on the presentation as a kind of coming attraction, if you will. But yeah, definitely think that there's a direct line between all of these things to add significant value to these projects.
Right on. I appreciate it. I know we caught you off guard there. You weren't expecting to present.
No, you're good. It's fine. I'm just glad it's not too noisy, but it is. I'm outside, so sound's not that great. But yes, I'm glad to be here and looking forward to next month's presentation. And so everybody, please come back for next month as well. Absolutely.
Yeah, make sure you come back. It's Randy Lucas. We'll be going over tax strategies as well as Section 179D. These are just another tool in your toolbox. Get your Batman utility belt out. And then the next month after that in May is Jonathan Cambus, who's also on here with IoT deployment services, who's going to tell you how to leverage the IoT, how you can access some of the really large scale IoT manufacturers through IoT deployment, and then how they can help you make that very simple and not scary. So that's basically it, guys. This concludes today's Inside ProCents educational webinar hosted by Mr. Ross Reida of LED.Finance. Thank you once again, Ross, for your time and for this informational and professional presentation. If any of you would like to follow up with Ross, and I absolutely recommend that you do, or maybe wish to dig into a project opportunity, feel free to reach out to him directly. His email is ross@led.finance, and his cell phone is 503-807-2141. Thank you all for spending time with us today and for supporting our ProCents environment. Winning is a team effort, and we here at ProCents are all about getting everybody into that winner's circle, and we're proud to be working with each and every one of you. As always, we close with a quick reminder of our ProCents culture. Remember, success always begins with consistency. Get yourself and your organization fully connected. Be active. Be responsive. Always do what you say you're going to do. And remember to support the environment by always first turning inward to fulfill your organizational needs. ProCents opens doors, and our participants always choose their own path, but they do it together. Thank you all once again. Have a great rest of the week.
Thanks, Devin. Thanks, Ross.
I can turn this thing off.
Thanks, everyone. Have a good one.